everybody. I'm here again with Jon Smith from Guaranteed Rate Affinity. Just doing a follow-up to the last video we did. We have a couple more questions to go over.
Hey, morning everyone. How are you?
So the next question that we have is, once you go under contract on a home, what are the next steps as far as the lending from contract to closing? How do we get there?
Awesome. Yeah, that's a good question. So once you get under contract, I feel like often these days that's one of the toughest things is just to get a contract accepted. But that's really when the work begins. So once you go under contract, you want to contact your lender right away, get them a copy of the contract, and you want to make formal loan application. And so what would happen is, as a lender, we would go over all the terms of the loan, make sure we're all on the same page in terms of what you want to do for down payment, and go over rate and closing costs and all that good stuff. So once you've come to an agreement upon the terms of the loan, we would send out all of our loan disclosures. The loan disclosures will need to be signed electronically, and you'll also have to gather documentation for your lender. We're going to need W-2s, pay stubs, bank statements, tax returns, whatever it is that is required for your situation in order to get a full underwriting approval. So you're going to sign disclosures, gather paperwork, submit it. You'll have to do an appraisal, as early on in the process as possible, to make sure that the property's worth what you're paying for it. And once that paperwork goes into the lender, we would package it all up and we would submit it to the underwriter for the underwriter to review everything. So once the underwriter reviews everything, we would issue what's called a loan commitment, which, depending on your contract, is going to be due usually within 21 to 30 days is about average. And so we'd issue the loan commitment. Typically, once the loan commitment is issued, there's going to be a couple little things that you would have to provide in addition to what you initially provided. So once the underwriter reviews everything, they always come back and say, hey, we're missing a page of the bank statement, or what was the large deposit, for 10 grand that went in on a certain date. And so there's typically a little back and forth. And once those documents are provided, it would go back to the underwriter for a sign off on the loan. We'd get a clear to close, and then you go to closing.
Awesome.
So, yeah.
Easy peasy.
If you say so.
One of the other questions is, what are common mistakes that people make when going through the loan process? Is there anything that they would do that would be a red flag or that could hold things up?
Yeah. Do we have all day for this?
Yeah.
I was like,
maybe just a couple minutes. the top mistakes.
Okay. I'm just kidding. So just some of the things that we encounter are, I have sometimes people will call me and I will do a verification of employment, and they say, Bob quit yesterday. I'm like, what do you mean he quit? So, I've had people that quit their jobs and get new ones. I've had people that are moving money around between bank accounts, which isn't necessarily a problem, but we just have to document everything. So anytime we look at a bank statement, we're going to wonder or ask where money came from. I've had people that put cash in their bank account, which can't be documented. So as a lender, we want to see where all the money is coming from, and if we see a giant deposit going into the bank account, then we're going to ask where it came from. Did you take a loan out? Did you get it gifted to you from a family member? Did you sell a vehicle? We want to know where all the money came from. So we want to source and season where monies are coming from. So
I feel like I've seen that more often with younger and first-time home buyers. If someone's helping them with their down payment, and they just transfer money to their account.
Yeah.
What do they need to do to document that?
Yeah, so we just want to see where everything came from. So if it's a transfer in between bank accounts, then we would just want the corresponding bank statement from the account where the money originated from. If it's a gift, then typically we have a gift letter, a standard gift letter that the donor would have to sign. And then we also want to see the money coming out of the donor's bank account as well. So yeah, we're pretty much good with, you know, gifts or money moving around. The only thing that can become really problematic is cash. You know, we don't want you know, digging the money out of the coffee can that was buried in the backyard for the last 10 years and depositing it into the bank, because there's no way to document the cash. So
As far as where it came from?
correct.
Okay.
Correct. Yeah.
What about like paying off a car loan or opening up a new credit card at Lowe's so that you can get your new refrigerator and appliances?
Yeah. So that happens a lot. You know, people, when they're looking to close on a property, they'll, you know, inevitably they're shopping around for furniture or for appliances, and you know, usually a few days before closing, I'll get a call. Hey, there's this great sale at, you know, Lowe's or Home Depot on appliances, and they're giving me, you know, 10 or 15% off if I open up this credit card. And no, you do not want to open up any new debt, because we check right before closing if any new accounts have been opened up, and which can affect the qualification of the loan. So, you know, we're okay if you're charging it on an existing account that you had open, but just not opening up any brand new ones.
So you can make the purchase, just keep it on your already open account.
Correct, on the open accounts that are already there. Yeah.
All right.
What else? Yeah, opening up, moving money around. Yeah, don't, you know, if you're getting a new job, then you know, don't go into a field where you're going from being W-2 to 1099 or W-2 salary into like 100% commission type job. You know, so those are, I think the main thing is that you always want to talk to your loan officer, and even if you think it's stupid and you think maybe it's insignificant, always to ask, because, you know, what makes sense in the real world doesn't necessarily make sense in the mortgage world. And so, you know, things that you may not think would be a big deal can sometimes turn into a bad thing. So just communication is, before you do anything. So
Sounds good.
Yeah.
Okay. Anything else?
That's it.
All right.
That's it.
Well, thank you so much for your time. I appreciate it. And the last time, a lot of people reached out and said that they appreciated all the information.
That's good.
So if you do have any more questions for Jon, let me know, and I will get you the answers. So have a good day.
Bye, guys.